Good morning, good afternoon, good evening, and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for October 3rd, 2009, blog at AccendoTraders.com. Effective video, technical analysis, trading plans delivered daily. And again, our emphasis here at Accendo Traders is working on trade plans to keep us in our trade, to get us out of our trades, to keep us disciplined, but most importantly, they allow us to have time to spend with our families. So, the week that was, the market ended down pretty much broad-based across the board. It was our second week that we ended lower. Last week it was all sectors lower, 10 out of 10, but this week we only have 9 out of 10 sectors ending lower. And for the first time, when we pull up the charts, the first time in a while, we're going to actually talk about where we are in relationship to the 200 moving average. So these 2 weeks certainly has brought the market back into some realm, and the question of the double dip, a lot of questions about where we're going to go lower are now suddenly coming into the conversation, so it should be interesting. And as we talked about last week, this week was all about economic data. But it started off with some merger and acquisition news this week. Again, last week we had some news. This week we had some news. And the one dearest to my heart is the Xerox buying ACS because my brother is a technical director at ACS. So that certainly caught my eye. But again, this was really about economic data. And on Monday we had the merger news. We had an up day, so sure that looked great. But then it all came in. So we had a negative consumer confidence on Tuesday that took us down. Wednesday we had the ADP number, and it's probably the first time that people really reacted to the ADP number in a while. We went down. We also had initial claims numbers showing that unemployment is going to continue to rise. We went down. And of course on Friday we had non-farm numbers that didn't meet, and we went down. Now what's interesting is a couple of things. Thursday was only the really big down day, 200-point story. That's really big. And every other day we went down, but the buyers did come in, so we're going to look at that on the charts. But once again, we had another week of bad economic news and thus moving the market down. Now, as you can see for the week coming up, we don't have a lot going on that's going to move the market. So what may come into attention is the Treasury auctions. They're usually early afternoon. Be interesting to see how the market responds to whether or not we get the bids on the Treasury auction. So coming into tomorrow, we got ISM services. Shouldn't do that much. Not that much going on before the market. We do have Mosaic, MOS, after the close for our fertilizer sector. But what's really important is you can see we've got Yum, we got Costco, we got Monsanto, but Alcoa. And that is going to be the start of our next quarter of earning results. So earnings should be coming into play just a little bit. Let's take a look at the charts. So looking at the charts, there's a couple things that are important. Again, we can see that we have the second week down. We actually have a lower high now. That's the first time we've had that in a while. And I got an email from a friend of mine yesterday saying, on bad news, how is it that we're not crushing? And I think that's important is that we already had 3 days down. And the also thing to look at is, do we have support where the buyers said, okay, this is a good place to buy back in. And the buyers said the 50 moving average was a good place for us to come back in and buy. Now, the only thing that's really important to notice about this is, again, we do see technically a lower high. And are we violating the price swing high here? And technically, yeah, we have. So the question is, again, are we going to swing back up here, or are we going to come down here and the bears push us below this 50 moving average? Let's take a look at the NASDAQ. And you'll see the same thing here. We got a lower high, came down, tested the 50 moving average. However, here on the NASDAQ, we really didn't violate the price previous swing high because of the big push up in September. Going to the S&P 500, lower high, saved at the 50. We have basically violated this past swing high. Not that bad though, so that's why it's not worrying me. What's really obviously what we should be paying attention to is this 50 moving average. So let's switch over to the monthly charts and see what we have. Remember, what have we been talking about? How was September going to close? How was September going to close? And we can see on the monthly chart that what did September do? It stayed below the 50 moving average. And here we are, and we on October's candle breaking it and coming right back down. Going to the NASDAQ, what did September do? We did not break the 50 moving average. October did break it, but we've come back down. Same thing with the Dow. What we're going to do with this 20 moving average? That September chart went up, tested it, and look, we basically have a doji. Now we have a nice rising 3 pattern going on here, but we also have an upside down hammer, inverted hammer, so that's not looking too great either. So again, we're at resistance levels. What's going to win? The resistance level or that support of the 50 moving average? Now I'm going to go back to the daily chart, and I want to bring in that 200 moving average. And as we're coming up here on the Dow for the longest time, we haven't even really looked at this chart. But I do think it's important to bring out that look where we are in relation to the 100 200 moving average. Here's the 50 moving average. Remember, that's where we tested. So there's our next area of support, the 100, and that kind of matches up with this little swing low here. Let's go to the NASDAQ. Again, the 100 moving average is the next area of support, kind of lining up with these swing lows here. And here's the S&P 500. And the 100 is lining up with these two past swing lows. So if we break the 50, there's where we should be looking for. Now let's take a look at what's going on underneath the hood. This is the market internals. And what we focused on last week was right here with these 3 days, Wednesday, Thursday, and Friday. And we said that it was the first time in a while that we had 3 consecutive days with negative breadth. Any number below 50 is negative breadth. And what was that going to be? And we actually predicted that we may head down to the 50 moving average. So ding ding, we did that. But even on Monday with our merger and acquisition news moving us higher, bringing positive breadth, and look at the volume. The volume was much lower than what was going on. So we had lower volume on Friday, and then we had even lower volume on Monday on this positive day. And then suddenly the volume kicks up, and our breadth starts to go negative with our biggest negative breadth here on Thursday with that 200-point down day. Now volume did light up on Friday, even when we went down and tested the 50. Now what's important about that is 2 things. The buyers did say the 50 moving average is a good place to come by, but we didn't have a lot of buyers coming in because our volume was lower than normal. So maybe the buyers aren't convinced yet. And again, possibly leaning towards that, are we going to head below the 50, retest the 50, what's going on? This week, again, we don't have a lot of news, and we're beginning earnings season, but really Goldman Sachs is coming up in a couple of weeks. That's when we start getting these financial companies that we'll start seeing some movement in the market. Quickly going through the sectors, you can see how weak agriculture are. Remember how we talked about Monsanto and Mosaic have earnings this week? That should be interesting. But look at energy sitting at the 50 moving average. Oils at the 50 moving average. Look at the metals at the 50 moving average. Steel. Check out gold. Even gold has made its way back to the 50 moving average. We know financial sector is important, sitting at the 50 moving average. Investors are Goldman Sachs. Actually doing a little bit better, sitting at the 20. And actually, if you come down here and look at the internet, they're doing pretty good too. So we have plenty of sectors that are sitting at the 50 moving average, which is consistent to what we see on our major indexes. And again, what's going to be our catalyst to move forward, especially since we do have the beginning of earnings coming back in. Maybe we'll see some of these sectors start to take off. Going to have to be brief with our educational portion of the market. Just talking real quick about being in the zone. And to be short, to be in the zone is being able to trade with the market, not allowing your emotions to block what you're seeing. And a good example of this would have been on Wednesday. The market went down 100 points, went up 100 points, came back down 100 points. And so, trading futures, I mean, that's great. That's beautiful. But how many people were able to trade that 100 points going back up, or were you straight and convinced that the market was going to continue to go down? So You've got to be able to trade with the market, take the information, and trade with it versus tell the market what it's going to do, because it's just not going to do that. Our 5 good minutes is with Your Trading Coach on YouTube. Your Trading Coach has some great videos that you can put in your toolbox, instructional videos on indicators. And we do have our podcast back up, accendotraders.com, subscribe podcast.html.